He is, ladies and gentlemen, the Chair of the Senate Committee on Local Government. Ladies and gentlemen, dear friends in CREBA, I welcome you once again to Palawan, and it is my deep honor to introduce to you the Chairman of the Senate Committee on Housing, Urban Development and Resettlement at the 15th Congress. Ladies and gentlemen, Senator Ferdinand Romualdez Marcos.
Thank you very much for that extremely thorough and very kind introduction from the Executive Vice President Lottie Carino. Congressman Rod Valencia, my counterpart in the House of Representatives, Mr. Jerry Navarrete, the CREBA Chairman of the Board, Mr. Charlie Gurayev, the National President of CREBA, the National Officers of CREBA, the Chapter Officers and Members, ladies and gentlemen, my friends, good morning. Thank you very much once again for this very kind invitation to be with you at the 21st Annual CREBA National Convention. As was mentioned earlier, it seems like it wasn't a year ago when we were doing this, when we did this the last time. But I suppose there have been so many intervening events that the year has passed very, very quickly. We should, my brief here today is to try and see what the situation is in the housing industry and what are the prospects for the future. So let us look at a brief snapshot at the Philippine real estate industry and where it is today. Between 1997 and 2004, the Philippines experienced the biggest property crash of all economies affected by the 1997 Asian financial crisis, as luxury condominium prices dropped 30%. As with the present housing crisis in the US and in Europe, a speculative bubble had formed in the 90s after financial liberalization and economic reforms, pushing luxury condominium prices up 63%. As most of you are, I'm sure, acutely aware, recovery from the crash has been slow. Although the industry was never lacking in prayers and boosters, the turnaround took a while in coming. Today, to the great relief of everyone, from the biggest developers to homeowners and investors, industry values and prices have picked up speed. Nominal prices are now back above 1997 levels, but prices are still 46% below pre-Asian crisis peak levels in real terms. A reminder of how much and how deep the crash was. Despite the recent floods which submerged Metro Manila, an optimistic change of mood has arisen in the Philippines. There is a sense of a new beginning. Foreign investment has been on the uptrend. As an English-speaking country, we are ideally positioned to take advantage of the global outsourcing boom. As always happens in countries enjoying relative economic growth and fundamental structural reform, prices of homes are rising sharply. In the first quarter of 2012, the average price of a luxury 3-bedroom condominium in Makati CBD rose 4.8% to 114,000 pesos per square meter, or by 10.68% during the year to first quarter 2012, 7.34% when adjusted for inflation. In addition, high-end residential real estate prices are likely to rise by another about 9.9% during the next 12 months. This year, property analysts project a significant rise in housing stock, with 8,253 units expected to be added to the Metro Manila supply by end 2012. And we are all very happy with that number, but if you look at that number relative to what is needed, we still are a long way off. According to the World Bank, 3 groups, as has been mentioned by Mr. Carino earlier, overseas Filipinos, business process outsourcing employees, and expats are the ones who are chiefly responsible for powering the increase in demand in the property sector. Overseas Filipinos' remittances are powering the low-end to mid-range residential property market. They are stepping up housing projects and mid-scale subdivisions in regions near Metro Manila, such as Cavite, Batangas, Laguna provinces. While the expansion of the upper residential market, including the luxury market, is due to increased housing demand from BPO employees and expatriates. In recent years, employees of the new IT-related firms, such as call centers and other BPO firms, have boosted demand for rental housing, with a ripple effect on the construction, retail, and telecommunications sectors, resulting in property price increase of about 59%. 16.2% in real terms from 2005 to 2008. In 2009, luxury condo prices slowed down to a meager 0.2%, or effective minus 3.81%. But the noted economic recovery of the Philippines that started in 2010 is now propelling prices up again, with 5.5% price rises in 2011. There are approximately 9 million overseas Filipino workers worldwide, or around 10% of our entire population is working outside the Philippines. Of all OFWs, 46.8% are permanent residents abroad. Employment in the Philippine Information Technology and Business Process Outsourcing industry grew by 22% to 638,000 in 2011. The BPO industry had $10.9 billion in revenues in 2011 and is expected to employ 1.3 million workers and generate $25 billion in revenues by 2016. Remittances from OFWs reached $20.1 billion in 2011. And I heard a figure that as of September this year, we were already approaching $22 billion for the year 2012. Remittances from OFWs were 20 billion in 2011, around 9.4% of our GDP, which is up 7.2% since 2010. It is estimated that 60% of these remittances go directly or indirectly to the real estate sector. Remittances are expected to grow at a diminished rate of only 5% in 2012. The World Bank believes that the remittances slowdown is due to, number one, stricter implementation of the Migrant Workers' Bill of Rights. Number two, the political uncertainties in host countries. And finally, the slowdown that we are seeing in the advanced economies. Significantly, this perceived housing industry surge is happening despite a problematic mortgage market. Most houses in the Philippines are sold for cash or pre-sold due to an underdeveloped mortgage market. Property buyers also face high transaction costs, corruption and red tape, fake land titles, and substandard building practices. These are real problems. Few major banks offer housing loans. Different banks' loans have strangely similar terms and conditions, and approval of loan applications is known to be a long and tedious process. Land titling and registration problems are also prevalent, as are delays in the foreclosure proceedings. Because of these factors, the ratio of housing loans to GDP remains quite small, at around 2.3% last year. Clearly, we need to correct these glitches in order to keep the observed boom going. Outstanding real estate loans for acquisition of residential property grew by 17.3% in 2011 and by an average of 16% annually from 2001 to 2007 to 220.8 billion pesos. Housing loan demand has been increasing because of lower interest rates and the bank's more attractive financing terms. Credit standards for housing loans somewhat eased in the first quarter of 2012, according to the Senior Loan Officer Survey conducted by the BSP. Further growth, it would seem, is likely. In July 2012, the BSP cut its key policy rates by 25 basis points to 3.75% for the overnight borrowing or reverse repurchase facility and 5.75% for the overnight lending and repurchase facility. Despite that, housing loan rates charged by major commercial banks has remained high at 7.1% for one-year fixed loans and at least 8.75% for mortgages with fixed rates for 5 years or more. The government-owned Pag-ibig Fund offers lower interest rates ranging from 6% to 11.5%, depending on the amount borrowed and on the loan conditions. Compared to bank loans, the amount that can be borrowed is lower. Maximum loanable is in the amount of 3 million, but the payment periods granted are longer and loan-to-value ratios are higher, 80% LTV ratio. Full-time membership requirements have to be fulfilled to get a loan. With all these salutary developments happening in our property sector, many are naturally apprehensive whether there will emerge another housing bubble like the one that enveloped us in 1997. Many speak with dread, understandably, about a housing glut, which hopefully will not happen. So what is the real score? The accumulated supply of high-end and mid-end residential condominiums from 1999 to 2011 was 118,230 units. 97% of these are mid-end range, priced with 1.5 million pesos to 10 million pesos, with an average unit size of 150 square meters or 50,000 to 110,000 pesos per square meter. 3%, around 3,690, are high-end units, which are considered high-end, priced between 10 million above, with an average size of 160 square meters or up, or about 120,000 per square meters. A sharp increase in supply began in 2005. Since then, supply growth has averaged more than 30% annually. The total stock of condominiums jumped from 7,000 at the beginning of the millennium to around 90,000 units by end of 2011. So we see no glut. Around 48% of condominiums built between 2004 and 2008 were in Calabarzon, a fast-growing region just beside Metro Manila. The Metro Manila region only placed 4th in the ranking of most residential properties built among 8 regions from 2004 and to 2008. 17% of the total condo new builds were in Metro Manila, only 17%. In addition, 11% of total single-house construction were in Metro Manila. A noticeable increase of new condominiums is also obvious in cities such as Davao, Cebu, Iloilo. Cebu, for example, has shown to have a strong demand with a take-up rate of 434 units a month. Quezon City heads the surge with 24% of upcoming supply in Metro Manila, followed by Makati at 18%, Mandaluyong 15%, and Manila 12%. These 4 cities alone comprise 2/3 of the total upcoming supply in Metro Manila. Around 33,000 units were completed in 2011, while over 50,000 units were launched. A 48% increase in completions during the year to first quarter 2012. An estimate of 8,253 units of new residential supply in Metro Manila in its key districts are expected to be added in 2012, while around 5,000 more completed units will be added in 2013. So the prospects for the near future would be considered brighter if the projected overall improved outlook for the Philippine economy in the end materializes. So it is in this light and with that objective in mind that we in the Senate, particularly the Senate Committee on Urban Planning, Housing and Resettlement, approach the task of shaping public policy and legislation to speed up housing and urban development in our country. Like you, We are most anxious that government should have the right policy framework and strategies to assist the private sector in ensuring the growth of the real estate industry and to come up with sustainable solutions to outstanding problems in the sector. Among the issues that have been identified that have to be addressed are the following. Number one, creating the most sound institutional setup for addressing problems and concerns in housing and urban development. Should we have a distinct Department of Housing and Urban Development? I think we have already answered that question. Number two, the adoption of a national involuntary settlement policy and adoption of a resettlement action plan to address the problems of informal settlers, slum colonies, and professional squatting. The inclusion of a resettlement action plan in major government projects is also deeply sought. And the development of more rental housing for the lower income groups as a key to relieving the massive housing backlog is an advocacy that I have taken up since taking this position. So as you meet today, for your national convention, I'm pleased to report that the 15th Congress is poised to pass the long-awaited law for the establishment of a Department of Housing and Urban Development. Last July 24, the Senate plenary passed on third and final reading Senate Bill 3199, which creates a Department of Housing and Urban Development in our executive branch. I understand that the House version of the bill is awaiting approval to the House of Representatives, but it is just, I believe, a matter of time before the House gives its full blessing to this legislation. I look forward to having both houses holding the bicameral conference to finally pass this important measure. Besides creating the Department of Housing and Urban Development, I believe it is equally urgent and necessary that the government should formulate and develop a national involuntary settlement plan in order to address comprehensively and effectively many thorny and outstanding issues in our housing sector, especially those relating to the needs of low-income groups. Resettlement, we must say plainly, is a major issue which has been inadequately addressed by our government and has not been sufficiently covered by wise public policy. It is my plan to propose to Congress the adoption of a national involuntary settlement policy that will set out our government's official resettlement policy and comprehensive action plan to deal with the various problems that this brings. Such a policy will also call for the creation of a national resettlement fund. In this way, messy problems in our housing sector can be effectively addressed, such as the issue of the presence of professional squatters in sites occupied by informal settlers, which poses a major deterrent to the delivery of socialized housing by government and the private sector. Unless we eliminate and stop the squatting syndicates, all our efforts to ameliorate the lot of informal settlers will be frustrated and wasted. We must confront this issue head-on, and we must do it now. The integration of a resettlement action plan in major government projects. Many a project has been delayed or frustrated for lack of a resettlement action plan to deal not only with right-of-way issues, but also with eviction of informal settlers. Also, the rationalization, the amendment of the LINA law. It's high time for Congress to deal sensibly with the inequities and shortcomings of the so-called UDHA Act, which has exacerbated many of the problems we are facing in housing and urban planning. While protecting the interests of informal settlers, the law has discriminated at least a little bit against the rights and interests of property owners, thereby stalling sound property development. The current boom taking place in our property sector is a great boon for the economy and for the country. For the real estate industry, it is a well-earned dividend from all the years of slugging through crisis and keeping faith with the industry. Down the road, there will be room for a lot more growth and profitability. Expansion is moving to include more and more regions and cities in the country. I'm confident that this dynamic expansion and development will eventually include the construction of more socialized public housing and rental housing, which are historically always essential to meeting the needs of low-income groups. We in Congress must have the wisdom to see this sanitary development as a great opportunity to legislate policies and strategies that will result in welfare and benefits for the greatest number of our people. The establishment of the proposed DHOOD will not be a magical solution to all our housing problems and urban development woes. At the very least, though, it will represent the injection of rationality into programs, policies, and agencies governing housing and urban development in the Philippines. In place of a scattered government system, we will finally have a focused and effective instrument for public service. Instead of addressing only aspects of the housing and resettlement problem, government will finally be compelled to deal with the problems and issues comprehensively, effectively, and most of all, rationally. With divine providence guiding our commitment to our onward undertakings, we will accomplish what we desire most for our housing and urban development in our country. You and I and our policymakers all have a stake in that. And this is an opportunity that we must not wait. Thank you once again for having me here today. Mabuhay kayong lahat and ipagpatuloy ninyo